Welcome everyone to the Kindle Report. Yeah, we're just kind of chilling here tonight. Working on changing some of the music around and other things. I made a couple adjustments to the studio today, and believe it or not, that's why I'm late. You move anything, unplug a wire, restart it. Anyway, welcome. Remember, this is where you come to protect your wealth. That's what my goal is here. And I see some comments as we're getting started here, and there's still some folks coming into the room, is that somebody asked the question, what are the reasons for that the bull market is going to start, or a bull market starting? Actually, the bull market started a while ago, and you don't need a reason, okay? So somehow I was on a Twitter Spaces this morning, and this brings up an interesting way to start tonight's show. And it shouldn't take long to get through tonight because there's really nothing going on. The last hour of trading was like watching paint dry. But I was on this Twitter Spaces, and you get a lot of folks, and this is, I think, what goes around on the internet a lot, is that people are always looking in the rearview mirror. They're trying to parse out little pieces of economic data that are going to tell you what's going to happen next. Meanwhile, all the economic data they're looking at is in the rearview mirror. It's already happened. Okay, so it's a very difficult way. I hope that those of you watching this channel aren't basing what's going on in yesterday is what you're basing your decisions on. I'm hoping that I give you some forward-looking ideas, and that's the point of going through our database, looking at, I'm very grateful to be a quant, okay? I understand macroeconomics. I do a pretty good job of doing it, but as you folks know, I do reverse fundamentals. I look at what the charts and what the quant stuff is telling me, whether it's TA or from our trading models, and I ask, why would that happen? So let's, the title of this video tonight is the market. There's a changing guard in the market. You see how the Russell's acting right now. NASDAQ got hammered. All the FANGs got hammered. All of that stuff happened today. And so maybe there's a serious switch actually happening here. And I've been calling for this for what, folks? You guys been around for a while, maybe for 6 months or so, something like that. And I guess the reality is you had to be really patient. So we're starting to see some interesting movement in the Russell. And the other thing is, listen, I'm not big on always, you have to have a breakout. This is boy, I don't want to go too far down this trail tonight, okay? I'll end up in a big rant. So, but I do want to say is this is a problem with trend lines, folks. Is people don't buy until they break the trend line. You want to buy low, sell high. So you definitely want to, you think about when we started getting traction on our database, going way back into, I guess, October, mid-October, we started getting lots of traction. Coming into year end, even more. And of course, as we came into the beginning of the year, we saw more traction. And I try to always show you, and maybe we'll do that tonight since there's not a lot to cover, is talk about the forward-looking part of what I do. And this is really important. I think, obviously there's themes out there running in the market, the AI theme, everything is out there in a big way from the standpoint of what's going on there. But now we're finally see, just about everybody got hit today. Microsoft, Amazon's, you name it, everybody. There was definitely some profit taking. So I always have talked for years, what is our job as an investor? And for me as an analyst and an investor, and that is if money's flowing out of something, where's it going? Because the money that are in the stock market, they're not going to go buy T-bills, okay, like everybody's telling you. I'm sure somebody's putting in a scenario, this is the beginning of the liquidity crunch. It's not. It's just seeing a rotation, and this is a really positive rotation for this to happen. Of course, I got to mention it because I've been telling you forever. KRE's up again. The bank stocks, oil stocks also helped drive the Russell today. And I would tell you that it was a pretty boring day trading, but the best trade was when, Bank of Canada raises rates. That just screwed everybody around, right? Everybody was going, we're going to pause, and now we're not going to pause. And I'm just going to warn you again, don't use the Fed futures as what they're pricing. And these things are always wrong. They're traders. It's just more noise. So I try to do something on this channel, and I have for years now, is to try to bring in a perspective of what type of trends are in play. I see a lot of folks, X amount of stocks over the 200-day moving average. The fact that it's over a 200-day moving average doesn't mean it's trending. It could be at a 52-week high crashing, and it's still above the 200-day moving average. What is more important, and what I show you all the time on this chart, now I'm doing these streams much earlier than I used to, like 4 hours earlier. So the result is I don't have today's database run. It doesn't come out until about 8 p.m. Eastern time. So that's why I always did the streams late every night. This is going to work way better for me. I want to do these things every day because it keeps me in tune. And when I tell you folks what I think, it helps me to buy into my analysis as well. So I've always written commentary and did this live stream pretty much every day. I used to do the produced videos. This is kind of funny, folks. I just segue here for a second. I told you I'm going to go back to produced videos. Sunday night took me 3.5 hours to do that video for 18 minutes. I'm like, okay, that didn't work. So that's why I'm back here now. I need to be efficient with my time. And more importantly, I need to get these indicators to you guys. It's like one of the new signal indicators have just been so useful on some of the intraday trading, and I can't wait to show that stuff to you. So anyway, but as far as things going, it's pretty much everything that happened today. I think what I'm going to do is just dig into the technicals and go through that real quick. I'll come back on screen maybe at the end just to talk to you for a few minutes. But basically what we're looking at here is a pretty quiet session. There's really no real material news. We get claims that come out tomorrow. So I don't see that as really being anything really big. In fact, I have to tell you, I've got my cheat sheet here, and I didn't even write them down. It doesn't appear, we're in one of those places, not where good news is bad news, and not where bad news is good news. We're in news is no news. There's nothing that appears to affect things from a material way. Everybody's on hold, and I'm sure the scuttlebutt around is just talking about what the Bank of Canada did today, and that was a surprise. So just real quick, while I'm in this open discussion here, is what I would tell you is I'm still sticking to my guns that we're not going to see the Fed do anything but raise rates. They're probably another quarter point. Maybe after that, we'll see what kind of numbers we get going forward. We do have CPI coming out right ahead of time. So I suspect that all of the central banks have talked to each other. All the Western central banks are talking. There is I would say, a concerted effort to be in sync with everybody. So that's why people got a little weirded out when the Bank of Canada raised rates today. So let's go ahead and get into technicals. I will go through, we'll go into the Wavetech database real quick. I'll show you that, and hopefully I got it scaled right. I kind of, because of the disruption in the studio this afternoon, trying to change a couple of things, I ended up at this point. So anyway, let's go ahead and take a look at the database. So as we look at what's going on here, this was from yesterday. We're at 50, this is daily. So we did have roughly 1,280 buys, and on the sell side, we had roughly 90. So we had a nice positive rotation. Like I said, I don't have the numbers for tonight, but we're at 52.97. Everything looks pretty good here. Let me just go to another screen here, and let's talk about some of the metrics around here, what's going on here from that standpoint. So on the daily, on the far right over here, there's a table I don't show you folks a lot, but what we're looking at is all the metrics that typically happen. So on the daily, we're, like I just said, we're 52 point, say, call it 53% long. Duration fulfilled, even with this current round, is 21%. This is of the holding period. Right now, the average current duration is 8 days, and the average is 39 sessions is how long these models hold. This is a very short-term snapshot of where we are. But if we go over here where it says optimize weekly, let me just draw this in real quick so everybody's eyeballs are in the right place here. So let's take a look here. This is the column I'm asking you to look at right here. So the optimized weekly is 204 holding. Currently, there's about a average duration right now of 45 days. So it's also right at 22% from the holding period. So it never gets to 100%, by the way. It gets to somewhere between 70 and 80 in very robust markets. And this also will rotate. It will go up. It will change as new ideas come in, because right now we're only 50% of the stocks are long. We've seen bullish scenarios come in where there's 80+% of the symbols are long. If we get another 30%, that would put us up into like the 12,000 long signals. Right now we have 8,305. So this that's on the weekly. So let me just I want to pop over to this other page here just very quickly. If we come over to weekly, it's 57%, and I just want to go back to that where I was focusing you in on the other side here is. So we're 57%, and like I said, we have 9,000 symbols on an intermediate basis. That was my goal in showing you that. So we are just very early stages in this particular rally. So going back to whoever asked the question, you know, what is the scenario for, you know, for a bull market right now? Fundamentally, I guess the big debate is there's different camps out there right now, which is one is we're going to have a soft landing. You know, you would think we would be declining, even though there is no real economic, I guess some of the output, obviously GDP has flattened off a lot, and we do see that, but you know, employment just stays really strong. And as long as people are working, they're going to spend money. And, you know, all these scenarios around credit crunches and all that stuff aren't really as important as folks are playing them up. Doesn't mean that things can't slow down in different sectors and things of that sort, but I don't see the collapse coming. And so the soft landing, the hard landing, you know, and then you've got folks that are like me. There's no recession, and I'm still arguing that last year was the recession. And for whatever reason, these metrics continue to stay positive. And whether the books are being cooked by the government, however you want to look at this, right? There's a lot of things that you can look at. But when I look at the database, and that's my whole scenario here, folks, is this database has guided me through decades of of markets, and it is a really good metric to follow. Those of you been, and I know some of you been around this channel since I went public, 3 years ago, back in the pandemic. And some of you are probably some of my institutional clients that have been around since 2008 and after that. And so you know that these metrics are really, really solid in helping you to guide your thought process and what's likely to happen. And like I said, the whole point of this is that somehow we get into a forward-looking scenario. So I said, this is really a time filler because it's not going to take long to get through these other metrics here. So let me go over and see if I can bring something up very quickly here that I haven't reviewed, and especially if you're new to the channel. Let's just take a look and see if I can bring this up very quickly. Bear with me. All right. All right, so I will show you this graphic. Sorry it took so long to get that. But this is key to understanding where we are. We are still at this second phase. When I was in yesterday's video, I said we're entering a new phase. Depending on what kind of traction we get in the database over the next several weeks, we get into this phase over here. Let me draw in a couple of things, and we'll just do a very quick education. And like I said, those of you, if you're new to the channel, the difference here is I don't just look at trend lines on an index. We're digging deep into the markets from the standpoint of what type of traction and what type of trend is. So when I show you the models and all of the traction, when I talk about the database, those are signals that there are high probabilities that there are trends that will continue. That's why I just showed you the walk forward sheet, that we're only 20% of this rally, of this cycle is completed. So, people are, you folks know, you're out there, you know what I'm saying here. But this is important because this area right where I am right here is what I want to show you. So this is approximately where we are. This is where we have to get to the end of that cycle. And then you'll see the database, the red arrows start to go down. And that is exactly what will be expected. But we're still in this phase right here where things are actually still accelerating. And so if we start to see this steady climb and we get into the mid 60s in the database and higher, then that's just going to perpetuate things much further down this cycle. So as it stands right now, we haven't even gotten to the peak of this particular cycle. And I'll come back up just for a minute here, just so I can talk to you about what this is really all about. So what I'm talking about here is that the focus of the database will help us to look forward instead of just looking backwards and talking about the last GDP, the last Friday's report on employment and all that. That's just a data point. So what we want to do is have some sort of look forward process, and that's what I continue to show you. And I've been talking this game, folks, going back to really the fourth quarter of last year, and especially coming into this year. And like I said, one of the things I'll just come up and talk about, since we're talking basically database and rotation, is the new thing that appears to be happening here is that the Russell's finally kicking in. those secondary stocks, and everybody is saying, well, you can't have the Russell can't do well and if interest rates are going up. And I'm arguing, and I've argued a lot to you folks, is that what we're doing here is we're normalizing the interest rate market. We're normalizing the economy away from the add money, put money on fuel. Everybody thinks it's like a campfire. We got to put more wood on. No, it will burn for a while. There's plenty of income and stuff out there. And yes, I'm very aware of what's going on in the world, but it's not actually in the place where we're going to just get derailed immediately. There's still tons and tons of cash flow. I think about it sometimes, like in the Great Depression, the unemployment was 25%. Well, 75% everybody was working then, right? So, it's like there's always something going on. There's always a rotation. And this is where I think we're at. And I'll cover this. I'll talk about this a little bit more as far as when we get into the Russell and looking at that rotation. I'm going to bring up some pairs and show you what's going on within that rotation. So let's go ahead and let's go into the S&P now. All right, so as always, we start off with the hourly chart, and it looks like we're going to try to rally back here a little bit. This is the last 5 hours of 6 hours of trading. Once and I'll show you a chart here in a second. We traded down almost perfectly to S2 today. So we got R1, S2. I thought we were going to, I thought we might see an R2. We didn't get any traction above 4,300. I believe R2 was 4,311. So we didn't get anywhere close. We printed that 0304 level again, and we got rejected out of there. So that's going to be your key number, just like before at 4,200. Now at 4,300, that is happening as well. And I just want to come up for a minute here. And what I want to tell you folks is that what happens a lot of times from the standpoint of when you get around these whole numbers like 4,300, it'll trade above it, then it will trade back down. We could trade into, back into the 60 handle or something. That you'll see the hourly charts look like a little weak. It looks like there could be a little more weakness as we go through this week, but that element is continuing to be there from the standpoint of that rotation that happens right around that whole number. One of the other things on this chart here, we have Fibonacci targets now: 4292, 4301, and 4306. So right into that range I was just discussing from that standpoint, because we're just seeing the pattern that is setting up is looking like it should turn bullish here in the next couple hours, and looks like we'll cross first derivative. That's what's being forecasted as we come in, and then it looks like we'll probably continue to be positive, move in the direction of becoming more positive as we go into toward London. That magic hour of between hour before, hour after London is big. And a lot of things do start from those levels from the standpoint of London seems to be the trigger point. It sometimes is the leader, not so much the markets themselves, the European markets, but the activity in the futures tend to have a meaningful effect on going through the night and coming into the U.S. Open. So it really gets a really nice setup. I wish there was a way that was healthy, that you never had to sleep and you could just trade, like stay awake from Sunday night to Friday's close. Never have to sleep. That would be awesome. That would be my dream. If there's a magic pill out there, I want that one. Anyway, so let's. I'll I want to show you this other chart here, and this was what I was just talking about on the value. So this is the market grid plotted here. You can see we got right up to R1. This was R1 here at 4,300 level. Our S2 here was S1. S2 is right here, right at 68, I believe is the number. We printed 69. There was a decent couple bounces off of that level. If you're trading intraday, you probably, hopefully, will be able to catch those. It was a pretty decent move, I guess, off the 90, around 91, 92 level was a decent move, but it was pretty narrow range again from that standpoint. But yeah, so this pattern, and you can see we're looking at some still. Let's go over and get the dailies. And what I think I'll do is the cycle I'm going to go through. We'll go and look at the S&P. Then I will come up and do the NASDAQ. That's going to be an important review tonight. And then we'll go through the Russell, and then we'll do the pairs. Okay, then we'll look at that stuff. But this is an interesting formation that's out there right now. So look at this 10-period moving average right now. It's still negative. It's still a 0.50, which is a big number here on the downside. So expect that to continue to be a downward pressure, and it is declining every hour. Let's see what it's doing right now. Just a quick, it's going down about 3 handles per hour. So you're going to be into 77, maybe 74 is going to be resistance, but that's where the algos are suggesting we're going to get back above the 10 and possibly run back to around the 21 and 40 period moving averages. This is an hourly chart. Okay, so let's go ahead and let's bounce over. Let me go over and let's take a look real quick at the market grid here, and we'll use trade station numbers tonight so you can see them easily. We're looking at there's something else that's happening. Not only, let me expand this out just a little bit so you can see this a little better. What we're getting here is a potential dragon head formation, which typically resolves itself to the upside. So if we look at the market grid for Thursday, we're looking at, right now we've had a low 73.76. We're talking 3 handles, folks. It's like I said, this has been going on for hours. But the algos, I'll show you the daily algos here in a minute, but it does appear, and the key, look what RXT is for today, 4304. We've been getting rejected just above that 4,300. That's the number I've been talking about, just from the standpoint of what you're likely to see there. So on the downside, S1 65, yesterday 69 low for today on Wednesday's action. So be slightly lower, and we could print down to an S2 again at 42.57. I think a lot of folks are going to be disappointed that somehow maybe the Fed's not going to pause. That may come into it. I believe, I didn't look at them, but the Fed fund futures already flipped their concept, whatever they were presenting last, all the traders came in. So it's sort of like trying to figure out elections through some of those websites that you can trade elections and things like that. It does tell you something about sentiment, but it's nothing about reality many times. So, but this is an interesting pattern. So let's go back over and take a look at the dailies, and I'll show you the algos. Like I said, that Thursday, this session we're in right now, starting overnight, looks to be the peak momentum, and we should remain above the 10-period moving average, 42.41. I just talked to you about S2, which is in the 50 handle. But we should hold, that's your extreme. 42.41 is actually a buying opportunity because the PPMs are at 0.35. Anything over 0.25 is big. I'll show you something here real quick. I guess it's one of those nights I managed to get the time on the screen here. But let's just let's bring this up real quick, because this is the probability map for the PPMs. And so we're over here at 0.35 is right here. So we're at a typical, we're almost at what I call the terminal level. It gets around 0.45, 0.5. And then if it rolls over, then it's a pretty typical mode. But if we get above, much above that 50 handle, then we start to get into an extended sequence. So we're going to have to watch this momentum. So this doesn't kick in until we get at like a 1.25. And typically on a daily, we don't get that. But this is basically the configuration. The PPMs will get up to this level. They'll pull back into the moving averages. You start to look for rejection points once you get to that terminal rate. And we'll start to see this stuff going. So we are not, like I said, we're at 0.35 there from that standpoint. So even on the, we're only 0.15 on PPM2 and 0.10, I'm sorry here, PPM3 0.09. So we're not in trend mode on 2 or 3. So the short term, that just tells us if it looks like after today's peak that we could see some kind of weakness coming in next week, which maybe that has everything to do with the Fed. And we're, as exciting as it felt being above some of these numbers and trading up to 4,300, we might do what I've talked about before. And I've talked quite a bit about this. I'll just come back on screen for a minute here. But what I've talked about to you before is that we've been doing this funny thing, and this goes all the way back to October, but we've been doing this stair-stepping where we were 39.50, 40.50, 40.50, 41.50, 41.50, 42.50. Now we're probably 42.50, 40, and then ultimately we'll probably print into the 43 handle. And as I talked to you about on the longer term aspects of what I'm expecting in the markets just the other night, is I am expecting us to get back toward the 44, potentially 45 level. And that may be where this thing stalls, and then goes into maybe a larger consolidation phase. So as I've talked a lot about on the channel, we've spent over a year in this sideways range, and what we're seeing here is a slight breakout of that pattern. We're starting to push the upward bounds, but it looks to me, the way this thing is so choppy, that's how we're going to end up. So I'm just going to go quickly through the NASDAQ. That's an important discussion we need to have tonight. And then I'll do the Russell and then the pairs, okay? All right, so looking at the NASDAQ, we got the pattern that is coming down here. We broke through we closed right on the 10. We're below it right now. We're looking at right now 0.17 down on the session right now. So we are seeing this move down. We're probably heading for the 21 period moving average. But the positive thing that's happening here is we still have PPM1 at a 0.45. So it's going to try to claw back above that 10 period moving average right now, 14,387. That's going to be your mark. Watch that. Look for some key numbers here. And I've got the market grid up here. We'll just look at the market grid. S1, 14,278, S2, 14,219, and then R1, 14,384, and R2, 14,443. So I would look R1 possibility of getting to S2 and ultimately probably declining toward this 21 period moving average on the daily. So let's go ahead real quick. I'm just going to come over this and just let's put the NASDAQ up here and just, yeah, see, we blew through everything yesterday. So that's the other thing that I suspect that we got is we probably got, and go to daily here. Let me just, let me go back to this other chart real quick. I am going to put on the STX buy counter here. And let me just see if I can get that to work. All right, I need to. Yeah, I need some training on TradingView. I don't know how to get. It shows me the arrow, but I can't get to all of them. I don't know how to rotate through here. So anyway, but we did get an RTX buy, so we should go sideways for 2 days on STX buy. So we should be sideways, but look at the momentum here, what's being projected. It looks like it's going to decline substantially, okay? So let's go ahead and let's go through the Russell, and then we'll get through these pairs. Look at the difference in the formation of the Russell. So absolutely exploding here, but as with the NASDAQ and with the S&P, Thursday's session is a peak momentum. And what that tells you is we're probably not going to break down. We'll probably manage to hold these support levels I'm talking about into Friday. I will do a stream again tomorrow for Friday. And we'll just have to watch these numbers very closely. And these, from this standpoint, looking at the Russell, we actually exceeded some of these Fibonacci's on the short term. Let's go over to the weekly, because that's where the numbers we want to watch at. We are heading for basically 2,000 on the Russell, and I suspect we're going to continue to see the small cap run come into play. And if you look at the upward projections here for the Russell, and look at this is weekly upward slope here. I'm actually going to bring up the NASDAQ because we're going to go to the pairs next before I bring the pairs up. But the bottom line is, you can see the PPM1 and PPM3 are actually accelerating here. PPM2 is flat, but what this tells us is this is our support range here between the 1804 and the 1856 level. That's a bedrock. Okay, you're going to be able to trade off of there any declines into that area, and it looks like momentum's going to stay up. And this is weekly for multiple weeks, at least 2 to 3 weeks before we start to see a fade. So I'm going to go back to the NASDAQ just for a minute, and then we're going to do the pairs. Look at the NASDAQ. It's pretty much the opposite. So that's the perfect time to put a pair on. This pair should have probably already been on, but the pattern is here, as you're seeing declining, pretty substantial declines, at least from the algos. They're suggesting we're going to see a test of this 10-week moving average. Where we are setting right now, and the way these PPMs work, when we get a penetration of that second derivative, that indicates that we're going to test this. PPM1 is tracking the 10-week simple moving average. It's telling us that we should at least test, if not penetrate, this 10-week moving average. Now, it's up at 0.74, so it's got such a large angle of attack that you're not going to be able to get through that. And that would be not this week, not next week. It would take probably multiple weeks to get there. So that's going to be the key in watching that. But this is still a really solid uptrend. The difference is it wants to come back to its support levels where the Russell is starting to move up. So let's go look at the pairs real quick here. Okay, so I flipped these over to daily, okay? So let's take a look. This is the Russell NASDAQ. And you can see it just screaming the last couple of days. And we still have a lot of work to do here, but I feel like that if I were to draw this in, and I will draw this in, is this. This is what we're likely to see out of this particular pair here. As we've got, let me get this a little smaller. All right, so what we're likely to get is some kind of deal like this. So we'll get some reprieve, and then we'll come up in the range, and then I'm going to flip this over to a weekly chart here in just a minute. But this pattern I'm looking at here is where we should really start to go into from the standpoint of the pattern. So we probably got a 1, 2, 3 here. Then we get 1, 2, 3 here, and then we start some kind of retracement from this bigger pattern here. Okay, so ultimately, between here and here is where the pattern, where we're going to retrace, whether it's 50, 60. We're a long ways, I think, from doing anything substantial. Going to do one more bit on this pair, though. Okay. And what I want to show you here is I'm going to convert this over. This is daily right now. Let's go to weekly, because that will give us a much better idea how much in a hole this thing is. Okay, this has been an issue going all the way back to 2016. Okay, this on the far left-hand side is 2016, and we've been in this big underperformance. We know the fangs, we know that story. That's what you're seeing here. So if you inverted this, if I made it NASDAQ over the Russell, then you'd see this big uptrend, and now you're seeing a potential topping pattern, but it's going to take a bit, because this is weekly, and I'm just going to go out one more level since I'm so deep down this trail. Let's go to monthly, and now you really see what I'm talking about here. Let me get rid of some of this stuff out of the way. But look at this. So this isn't even a thing here yet. There's this potential of this trade is monster, and it doesn't have to make, let me just change the scale, because this chart that we're looking at right now goes all the way back to 06. So this trend has been since 06 is where we're looking at. So this is a monster multi-decade trend that we're looking at. And so getting up to where it was in the previous time is probably a reasonable expectation. All I just talked about going from the daily to the weekly is that really what we're looking at here is just getting back up to 50-60% of this. At some stage we get that little 1, 2, 3 pattern to set up is how this thing should set up. And it's like I said, this is a very, very long-term trend where the NASDAQ, especially from an index standpoint here. Let me just come back up here real quick here. From an index standpoint, what we're looking at is this monster multi-decade trend where small caps have been outperforming, but you have to understand that these indexes are alive, meaning they change all the time. We keep track of all the changes in the S&P 500, and we update our constituent list. I believe there's since 2000, there's been almost, I'm just going to throw this number out, it's pretty close to right. There's been almost 300 new stocks in the S&P 500 in the last 20 years. For sure it's 200, but the 300 number is sticking in my head right now. But it's a lot. there is material numbers. Actually, I can actually tell you what that number is by just going to Wavetech. I can bring that up, but maybe I'll do that after we finish. But I want to emphasize that this trade, this situation we're looking at, is really deep. If you're looking to buy value, this is where you buy value. You buy value based on these stocks are way undervalued. We just finished our institutional screens, and I'm anxious to see how they come out. They should be up probably next Monday. We're a week late. Because of earnings, we wanted to delay just a little bit. But once we have these out there, I think we're going to find some interesting things, maybe rotation from a fundamental standpoint as well as the quantitative and everything else. It's not just the bank stocks that are looking interesting, but you have to realize if you're buying low, selling high, this is where low exists. So if you're looking for a positive rotation, this is where you're going to find good ideas. Those of you using Wavetech, institutional clients, all you folks, this is where you're going to find value if you're looking for ideas. And I've been, like I said, I've been going on and on for months about this whole situation. So anyway, so let's go ahead. I'll go ahead and through all the other markets I do. We'll do what we normally do. We'll go into interest rates next. All right, so yesterday, in yesterday's stream, I was talking about looking like everything's going to roll over here, and of course we get a blast back up to 380. Why? Because of the Bank of Canada thing that I've already discussed. But we still have that positive trend. I was talking about that. I thought we would trade down into the support, which basically we did. If we look at the levels here, we printed down, let me get the number here, 365. I was talking about 366, 360 as support. And so we're still trading within here. We still have these upward fib targets on the interest rates, 401, 429, 447. So those numbers, those are still live numbers. And those would be interesting. The only thing it looks like we do have, this is a weekly chart we're looking at, so it does appear that we have the potential for multiple weeks on the upside yet, and following this curve that you see here coming up. So it is rising. So as we go through probably around 366, I talked about this number last night, 366, maybe 370. And what I would look for as we come into the end of this week is actually where the market is probably going to try to top out here, but we have at least 2 more weeks of positive slope here. So we're going to stay in that 360, 380 range. We could spike up. What I was going to say is what you want to watch for is on the weekly charts, those of you that have the indicators, when they look at the market grid to see if it turns up on Friday for next week. If that turns up, then we've got an upward slope, maybe setting up an upward channel, and maybe these fib targets are more real than I thought they are. These algos will change, especially if we get above certain levels here. You're going to see a recalculation go on. Right now, they're still positive. I tell you folks all the time that have these indicators, about 2, maybe 3 bars, you can have a reasonable expectation. That's why I only talk about 3. I've got 10 looking forward. And the reason why I have 10 looking forward is I like to see the potential pattern. And it's interesting because a lot of times it plays out in the configuration to a point, maybe not the exact numbers, but it gives you a feel for what might happen. Let's take a quick look at the 2-year. It popped a little bit. We're right at the Fibonacci 1 here, 460, high 460.05, printed 455 on a close. We have further targets here, 5%, 5.25. So if I'm right about the terminal rate getting 5.25, 5.5, this 2-year probably going to start to continue to come toward those numbers. I mean, here we are. Right now we're at 455. So that's a big move on the 2-year. That's 50 basis points. That's quite a bit. But that is potentially, like I said, these targets, these fib targets are live and they are valid. So keep an eye on all of that. All right, we're going to stick with the weekly charts here. This is interesting. So I do have, now it's showing up, I have the STX buy signal counter, and I'll be telling you all about this indicator. Typically, I've been using this on the S&P and the E-minis, and on a two triggers on a 5-minute chart have been really deadly at catching some monster moves. That move the other day where we went vertical off that low was the perfect buy. So I'll be talking about this and showing you folks how to use it. The plan is when the indicators come out, I'll be doing a live stream to go through and talk about the whole suite and what's happening there. So get ready, it's coming. But the targets here for crude oil are still somewhat, even though there's a fib target here right now, 82, 90, 94. If we look at the PPMs, this is weekly, there's some negative. We're crossing first, second derivative. We're about to cross second derivative. So this downward pressure here on these moving averages are substantial. And we're looking at right now from that standpoint, we're looking at we'll call it 75, 50 is major resistance. And we would have to trade and close above those levels to probably get these algos to turn up or change the forecast. Right now, it looks like we are going to stay sandwiched. I'm going to call the 200 to the up into that range at 75.50 on the upside. The 200s around 66, 64. And it's interesting that once again, we did not get as much reaction as you would have thought we would have got from the OPEC announcement the other day. All right, so we'll do gold. Gold back under pressure a little bit here, trading back down toward the lower end of this range. We got down to 53 low, 57 last. That 21 period moving average, this weekly chart again, is key, but we're looking at a massive deceleration continuing. You can see the predictive indicator here on the SMA 10 is predicting that we're going to get a crossover from the 10 to the 21, which at that point, that will most likely carry us down toward the 40 period moving average, and that crossover will actually be a bullish event, not a bearish event. They'll actually set up some kind of configuration of a potential low. But for right now, the only way we're going to, that event can happen is we have to continue to trade under the 10-week moving average on a simple. And that is 1992, and it is declining right now only about $3 per week, but it does look like it's going to accelerate over the next couple of weeks. So look for that top end, probably 90 handle, maybe 85 handle going forward. That's going to be where your top end resistance is going to be. Support still with the PPM 2 at 0.45 bullish. That's still going to be a really good support level, and that's right at the 1946 level. We printed down week before last. We printed, that number was 39, and we were able to print at that time. We printed down to 36. So we basically bounced off there, ran all the way back up the following week back to 2000, and we're just working that range. And I think we continue that triangle, and those moving averages are getting tighter, but the algos are suggesting we're going lower. And I still think there's a potential to get down toward into the 18 handle here on gold. All right, so we'll do Bitcoin. It's interesting. Crypto, even though a lot of folks will argue that Bitcoin is not crypto, we are looking at this downtrend. And as I've talked about every time I cover it, every day, I guess, that the configuration here on the chart looks just like gold. So ultimately, we're sandwiched. We're actually trying to bounce around between that 21 and the 10-week moving averages. Ultimately, it looks like we want to get down to around 22.6, 23, 22.6. Looks like probably where we're heading here, even though we're around 26. It looks like, look at the algos. They look just like gold. There's no doubt. So there's not much there. I'll take a quick snapshot of the short-term stuff, and you can see it reacted as well. We got some negative. We did get an uptick here. It looks like we're probably going to stay below the 40, which, let me give you these numbers. Going to stay below the 40, 27.5. I'm rounding numbers up, and then probably look to a potential. This chart's going to update it at midnight Eastern time. So I'm expecting to see the market grid turn down. So if you have the indicators, I'm using Bitstamp as the exchange I'm looking at. But it does suggest, the algos are suggesting that whatever this low is probably going to be the bottom, meaning that we just trade right back into these moving averages again. So that's pretty much where we are right now. Okay, folks, that's going to do it for tonight. I appreciate everybody coming. You got to tell your friends I'm back online here, and let's get our viewership back up, and share these videos. Make sure you subscribe, all that good stuff, and we'll go from there. I'm just looking at, see if there's anything I can respond to. Yeah, okay. So I guess that's going to do it, folks. So we'll bring back the music. I'll say goodnight, and I will see you folks tomorrow, same time. Thanks a lot for watching. Thanks for coming, folks. Yeah, probably have more music. I got a feeling I might get a mark against me on this one, so I'm talking over the music just so they don't penalize me. I'm not sure if this stuff is copyrights and restrictions or not. But anyway, thought it'd be a nice change. Anyway, folks, have a great evening. Good luck trading tomorrow. We'll talk to you tomorrow night.